Okay, this hangout is now live. This is Mike Durr, the Kingwood mortgage guy. I operate in the northeast part of Houston, Texas, but I'm licensed to do loans all over the state of Texas. And the purpose of this particular hangout is to explain and detail what the rules are for using gifts when you're buying a home. And it's particularly for the first-time home buyers, but probably even more importantly, it is for the giftors, or in most cases the parents or the grandparents or the uncles and aunts or the sisters and brothers, anybody that is willing to give their family member a gift. And we'll go through a couple points about, does it have to necessarily be a family member? Well, maybe not. There are some options, but I would say that 95% of the time that it is the gift is usually given by a family member. Okay, so let's see if I can figure out how to show my screen. I think I've got it here. Okay, so gift funds, making sure the process for making the gift fund is done properly. That's the premise of it. And again, my name is Mike Durr. I want to make sure that you understand that I am licensed by the state of Texas and the NMLS, which is the governing body for mortgage entities. I work for Nations Reliable Lending, and we are an equal housing opportunity company. And of course, I want to make sure you write down my phone number. That's a big deal. So here's what the deal is. Who can give you a gift? Family member. Proof is easy to verify. Parents, siblings, uncles, aunts, grandparents. Getting married, your fiance can give you a gift. That happens a lot. A close friend. This is a little bit of a hassle because you have to prove that the person has been a longtime friend, but we've done that. Two unmarried partners can give a gift. And borrowers, employers, this happens all the time. It's particularly helpful, and a lot of times the company will do this if they're relocating you. And then finally, a labor union, even though labor unions aren't prevalent in our area, they are also qualified to give you gifts. And so that is who can give it to you, but I will tell you that most people, it's family members. It's this group right up here. All right, who can give you a gift? Let's see, I just did that one minute ago. Well, the seller of the property you're buying from can't give you a gift. Pretty much anybody that's involved in the home purchase can't give you a gift or can't do anything that would be considered an inducement to buy. So the lender, if he's affiliated with the property, can't do that. And no one who will gain by the sale of the property can be a donor. So that rules the old game. We used to be able to do that kind of stuff. Not so much anymore. So here's the crux of it. The lender must track the funds from the donor's account to the borrower's account. And we do that by obtaining a copy of the canceled check or other satisfactory withdrawal document that shows the gift leaving the donor's account. Now, what that means is that the donor usually has to give a copy of their bank statement showing A, that they have the funds to give. They also have to show the funds leaving their account. And then finally, we look at the borrower's account and see the funds being deposited into the borrower's account. So that's the crux of it. The donor has to show an account that he has the funds to give, and then they have to show how they landed in the account. Now, a copy of a check, a copy of the check for the gift is always a good thing, but you still have to show the bank statement from the donor or gifter, because underwriters require that they see that the borrower had the funds to give. Now, is it okay for the borrower or the giftor or donor to borrow the money? It is, but all that has to be tracked. They don't want to leave any stone unturned in where these funds came from. There's a whole different set of rules for, can the borrower borrow funds for his down payment? And in fact, you can, but you have to do it in a very specific way. So one more time, just because this is the crux of it, we have to document the funds coming from the donor's account into the borrower's account. And we do that specifically with getting a bank statement from the donor and showing those funds, that he's got the funds to give, and that the funds have left that account via the check, and then they show up in the borrower's account. All right, so, and the second part of that is there's a gift letter. Now, in the gift letter, this should be real easy to see, but we understand that the gift will require documentation, including proof that we have given the gift from the account listed below, and proof that the funds have been received by the applicant or the applicant's attorney prior to settlement. So you can't wire the funds directly to the title company, but you have to sign this. And here's what it says here. We certified that this is a bona fide gift and there's no obligation, expressed or implied, to repay this sum in cash or other services of any kind now or in the future. We understand that this gift will require documentation, including proof that we have given the gift from the account listed below, and proof that the funds have been received by the applicant or the applicant's attorney prior to settlement. So I like this part because it has to be a gift. But when you give a gift, that doesn't necessarily mean that the person that receives the gift doesn't give it back at some point in time. And I mean, it says here that there is no obligation, expressed or implied, to repay this sum. It's not a loan, it's a gift. But there are some times that you get a gift and then you reciprocate. So anyway, I wanted to just say that. All right, the bottom part of that says, we certify that this is a bona fide gift and that there is no obligation, expressed or implied, to repay this sum now or in the future. And then the name of the depository source, Chase Bank, address of the same, account number, and then your signature and telephone number. Because guess what? There's a good chance they may call you on this. So what does this look like? Well, what I did is I put together, this would be an example. Let's say that the gift is going to be $6,000. And in this particular case, of course, the full bank statement would have to be shown, and it would have to have the person's name on it. In this particular case, I crossed out these account numbers because they're right here, but you couldn't do that. You don't want to, what do you call it, redact. You don't want to redact any of the document. And if you have concerns or trust issues with the mortgage person, then you shouldn't be using that mortgage person to start with. But in this particular case, the gift is going to be $6,000, and these people obviously have more than $6,000 so that they can give. Okay. Now, keep in mind, this statement would have to have their name, and the account numbers would have to be shown on there. The borrower's account, here it shows that in March 18th, the deposit came in, gift funds hitting the account, it hit there. So their savings went up, or their money for down payment went up, so that it could be documented. And that's the way it works. And of course, again, the borrower's name would have to be on this bank statement. It would have to be just very clear that this is the borrower's account. So you have to declare the donor's account and the borrower's account. Very detailed. They want to know. Underwriters will not stand for anything less. Some specifics: donor must be relative, fiance, domestic partner of the borrower. Donor may not have any affiliation with the home builder. That's kind of what I said before. Funds may be used for entire down payment and cost. Updates, that's for conventional. FHA is kind of similar to that. Gift given at closing. The gift can be received at the closing with a certified check or wire from the donor, and a copy of the withdrawal receipt from the donor's bank account is required. Sometimes it's easier to do it that way, so you kind of bypass it hitting the borrower's account and just goes from the donor's account straight to the title company. And that's okay. Again, we just have to document that. So that's the crux of the gift stuff. That's not a full expose on how gift funds can be used, but it should help you as far as understanding what is needed. If the donor borrowed funds for the gift, the donor must provide acceptable documentation that the funds were not borrowed from a party in the transactions or the mortgage lender. You can see the mortgage lenders are very paranoid about where that money comes from. And cash on hand from the donor is not acceptable. And when I say cash on hand, I call that mystery money. That's money that's not in an account. It's mattress money. It's cash on hand. And again, cash is not a good thing in the mortgage industry. So you just have to get past that. Now, cash is a good thing. It's just not a good thing for the mortgage industry. So, okay, so hopefully that was helpful. What I'll do is I'll try to edit that so it's not so choppy. But appreciate you taking a minute to look at that, and look forward to talking to you soon. Bye-bye. Oh, by the way, call me. I'd love to give you a little more detail if you want me to.